Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. Feature update. There's 2 of me now. This is pretty crazy. StreamYard offered or added it so that you can actually plug in 2 cameras. Now I'm over here, but I can also be on the front side. So I've got 2 cameras. I don't know. This is a cool feature. Oh, interesting. Okay. Can you guys hear me? Let me know if you can hear me. Can you hear me? Kind of cool. You can see my, I don't know. I just saw this setting. I was playing with it. But good morning, good afternoon. Welcome back to another live stream. Hope you're doing well. You can hear me. Kind of. You can hear me. We're playing with it. I don't know. That's kind of a fun concept. We can put a second camera somewhere in the room and maybe off air we'll experiment with that because that's kind of fun. I can have a second camera set up for the live streams, give you guys a surround sound experience. What's happening behind the monitors? I don't know. Anyways, good morning, good afternoon. Welcome back. Hope you are doing well. And on this stream, you guys know what we do every day. We take a look at market setups, ideas, what's happening in the markets today. And all I ask as we get started is if you could do me a favor and hit the thumbs up button on the stream. Lets YouTube know we should get some more people in here and get the party started. S&P 500 and NASDAQ had a rip of a day yesterday. It was a really nice push. And I would say, as I have been saying, pat myself on the back here a little bit. I do still think that the bottom is in for now for the market. Looks like we've confidently, when we had this intraday reversal, that was just to me, a very strong signal that likely you were going to get the follow through. Why do I say that? Well, there's been a theme. You know what the theme has been? Mondays, market sells. Fridays, market sells. For the first time, the pattern, for the first time this year, really, on average, this year, it's been sell Fridays, sell Mondays, right? Get out of the way of the markets, Mondays and Fridays. This time around, this past Friday and yesterday, the script flipped. And that to me signals there is a strong probability that the market has flipped. Friday, we had a big confident scoop back up, right? So what I mean by that is on Friday, you had an intraday sell-off, but buyers into the weekend ripped that baby right back on the day to green. And then you had the confirmation. Monday comes along and boom, to the upside we go. Isn't green just a beautiful color? I think green is becoming my favorite color. But anyways, looks good, looks confident, and follow through today just is extra icing on the cake. My opinion here would be that if you get a pullback, in my view, that is an opportunity to add, to get long if you're not, right, etc. You do what you want. This is not financial advice. That's my opinion, right? I could be wrong about that, but I think there's a good probability that the idea is the market got so scared and bottomed out. And now with higher lows coming in on this and actually breaking through that 2-week kind of chatter area that we were in, this looks like the market has room to continue higher. And again, that's not a guarantee. Nothing is a guarantee in markets, right? But this is about as good of a signal for a possible bottom as I think you can get. Let me back that up. I keep saying these same things, but it's important that we reiterate and say things over and over. If you're a regular, you've heard me say this 1,700 times, but this is going to be the 1701 because it's important stuff. Look, the market got really scared and people bought heavy protection. What I mean by that is that when people get really scared in the markets, in the stock market especially, they buy puts, right? They buy puts, which are leveraged bets essentially that the market is going to go down. And if you buy them for protection, which is what a lot of people do, they buy puts to protect their portfolios in the case that the market goes down. So everybody bought protection or even speculated that the market was going to fall. We also see that in the AAII Investor Sentiment Survey, which showed respondents were feeling for the 4th week in a row extremely bearish. So you have all the recipes here for a sharp reversal from here, in my opinion, in the indices. Because when everybody gets scared, what happens is that the bounce back, if there is good news, which we've seen some flexibility from Trump on the tariff stuff, which is a major, major bullish catalyst at this moment, because that's what took us down. That's what can also take us back up. Reversals on the tariff concerns could lead to a very sharp recovery. Throughout market history, a lot of times what happens when you get sharp sell-offs is you get sharp recoveries. That's not always the case. Nothing ever is always the case. Nothing ever is as easy as it looks in trading or investing. But I'd say you have the recipe here for a short squeeze and a sharp market reversal to the upside. A couple other things I'm watching here out the gate today. I am long silver, which is doing quite well today, 1.64%. Stop loss remains unchanged. Took this trade yesterday inside of the Discord. For those of you who are in there, I'm going to be looking to trail a stop on this one if we can get back to the previous highs. So looking good on silver. Nice start to the day. Love to see this thing, at least right now, engulfing kind of the last two candle bodies. Looks really solid. The question is, can we get some follow through to actually, the follow through is here in terms of this candle yesterday getting completely waxed, right? Let's just get it, candle waxed. This candle completely waxed the previous one. Nice follow through to the upside. And now for the opportunity to trail a stop, what I'd be looking for would be a break through these previous highs and a closure above. So silver trade looks really good. The bullish positioning I have on indices looks phenomenal, but I'm actually looking to add more. So what I mean by that is I'm looking at the NASDAQ, and if you do get some pullbacks, I'm going to probably add more positioning to my bullishness in the stock world. So really confident signs, in my opinion, that we've seen a low for at least the time being. And it would take some serious escalation on the tariff front to really get this market to crumble back through those lows. Could it happen? Of course it could. That's the fun part, I guess, or the not so fun part, depending on which side you are of it, about markets, is that nothing is for certain. Everything is about educated guesswork. I say that every day on my channel, but it's really important that we know the difference between knowing, quote unquote, what the market's going to do and making an educated guess. At any point, you have to be ready to say, oh, well, looks like I was wrong, and adjust, pivot. Nobody wants to admit they're wrong in the world, right? Everybody wants to be right, which is understandable. But in markets, it can be very rewarding to take a hard look at when you have an idea and say, look, I was right, or look, I was wrong. It's really, really a powerful thing when you start to accept, like, look, if this market tanks through the lows, I'll get some teasing comments, Nick, you idiot, haha, see it went down. And I'll say, yep, you're right. And I'm going to move on because I care more about my P&L than I care ultimately about being, quote unquote, right. Like, I know what I'm supposed to do in this situation according to my rules. We have put in higher lows here. We've broken key resistance. I am supposed to be long, especially when the EdgeFinder shows contrarian signals giving me a bullish reading on the NASDAQ, right? I'm supposed to be looking for longs. But if this breaks down, if the NASDAQ fails out, then I'm not supposed to be in longs anymore, and I move on. So again, ignore the noise, because there's going to be a lot of people who are getting absolutely crushed by this very small movement, right? This doesn't seem like a lot. It's not a big move up. There's people getting crushed out there. And again, the reasoning for that is because a lot of people chased puts when the market was selling off. I've been talking about this a lot in my videos recently because it is something that we observed in the put to call ratio. Like there was a massive rush for betting bearish on the market. And that ended up yet again, as it usually is a huge loss for people who do that and a huge opportunity for people who are patient and buy into and step into a fearful environment. So that's what I did and what I look to continue to do. Is there's still uncertainty, and that uncertainty to me is an opportunity to stay long, because I don't view the economy as going into a major recession at this time. The data doesn't really support it from what I can see. Right? If I take a look at the U.S. economic heat map, here's the thing: inflation is cooling. That's a positive factor, right? Okay, what about jobs? Well, jobless claims were decent last week. JOLTS job openings were pretty healthy. Unemployment rate still at 4.1%, even if it ticked up slightly. I mean, we're still at 4.1%. That is super low unemployment. Wage growth is outpacing inflation at 4%. People are getting paid. Their wages are going up more so on a relative basis than the average price in stores. That's a positive thing for the consumer. Non-farm payroll was expected to be horrendous, did come in a little bit light, but not nearly as bad as people were forecasting. ADP was a miss, right? So we have some negatives in here. Manufacturing PMI was a miss. Services PMI yesterday and the ISM services PMI better than expected, right? So again, if you're calling for a recession, it's not in the hard data yet. Now, the argument people who are bearish on this market would make is that it's in the soft data. Oh, the consumers are saying that in the future, prices are likely to go up and the consumer's feeling weak. But what Powell himself has been mentioning in his speeches are that you have to be careful with consumer confidence. You have to be careful with surveyed responses from the masses, because a lot of times what people say is they feel like, oh man, the economy is horrible, and then they go buy a new car, right? So the actions and the hard data is what we do lean a little bit more into. And so that's why when we talk about consumer sentiment, people who are bearish right now are pointing out, well, oh, but people are saying it's going to get worse out there. Well, people have been saying that for years. The consumer, right? The consumer out there, here's something nobody wants to admit, right? People have been saying, oh, the consumer is going to get killed. Well, look at oil prices. Anybody else notice that the gas pump is cheaper? And this is not about political biases, because the prices of gas were actually going down under Biden too. So this is not a political charged statement, but gas prices are overall in a much better place than they were in like 2022, where we had Russia invade Ukraine, and it was a really, that hurts the consumer. So before you say, oh, the consumer's in a terrible, terrible spot, look at the data. It doesn't fully support that right now. Here's two things. The oil prices are on a relative basis much lower. That means gas pump more affordable for the average person than it was, right? I'm not saying it's easy out there. Nothing is easy out there, right? The world's hard, but you have to be factual about it. And you also have to take a look and say, well, look at the 10-year. The 10-year's off of its highs, so people can go borrow money a little bit easier. And if this keeps going down, which seems to be a strong goal of the current administration, if that does occur, if they get what they want there, that is good for the consumer. Lower borrowing costs allows them to get loans easier, buy cars, stimulate the economy. So my point is, what people say in surveys and responses, like the consumer confidence, look, it's still worth keeping tabs on, right? We could pull up consumer confidence, which has come down a little bit here, but be careful drawing too much of a conclusion from the quote unquote soft data, right? Because here's the thing, here's the hard data for you. Oil and gas prices are down. Okay. What about inflation? Inflation on an overall basis, down. Now, hear me clearly. Prices are not down. Prices are still expensive. I'm not disputing that. I think everybody knows that prices have risen a lot in recent years. But here's what I'm saying. Prices are rising at a much more moderate pace than they were over here. 7% inflation, 8% inflation, that hurts. That really hurts because your prices of stuff are going up dramatically. But 2 to 3% inflation, much more able to deal with that than 8%, right? And that again, we've seen the decline in inflation through 2023, 2024. We saw really great progress on inflation. So again, will we be able to continue to see that overall trend? I think possibly. So, when I look at the state of the economy, overall, we've got good jobs growth or a decent jobs market, right? Unemployment rates at like decade lows. It has been for the last few years, right? So we have decent labor market data. Let's take a look at our unemployment rate. You can see unemployment rate went up a little bit, but has kind of since moderated. 4.1% is not bad at all. I mean, the long-term average is 5.7. 5.7, we are well below that. Fed also wants to keep this number where it currently is. They've actually, Powell was sounded much more sensitive to growth than he did inflation on his last meeting. So the point is, there's a Fed put, and I also think that there's a Trump put. So to me, again, things look pretty good in terms of a rebound opportunity. Risk reward looks good with sentiment so extreme. I like the setup. I'm definitely way more bullish than I have been in some time for this market. For multiple months here, I really did not have an interest in trading indices. You can go back and watch my streams and videos during that time. I was trading gold quite a bit during most of the last, few months. But recently, indices to me look very, very attractive on a risk to reward basis. Doesn't mean they're guaranteed to go up, but the risk to reward to me looks very good. So, here's the thing. Retail sentiment. I'm sorry, that's not what I'm looking for. I'm looking for, let's keep going on this economic data stuff for a second. Retail sales. You really want to know how the economy is doing. Look into the consumer, right? That is a really important thing. We missed expectations and we had a pretty ugly retail sales number before that. This number comes up pretty soon. I'm really curious to see what the next round of retail sales data brings for us, to see how the consumer is doing on that front. But services PMI, we're missing the latest data on the, no, we didn't. This is ISM. Yesterday we had services PMI numbers. The flash services PMI numbers were great. So showing some optimistic outlook for the economy. So my point is right now with this is everything perfect? No, but the market headlines will have you believe that the market's falling apart and that consumers can't afford to blink. And that's the story that's been going on for a couple of years now. People saying, oh, the consumer's completely destroyed. Well, I just think that you have a lot to prove there before you count the consumer out, because for years, people have been saying, oh, consumers tapped out. They can't afford anything. And then the consumer surprises everybody. Let's take a look at the credit card companies. Here's AXP. This one did take a dip, but it's bounced back nicely. And overall, again, during all that, consumers dying phase, stock's done really well. Now, American Express, you might say, well, yeah, that's the more wealthy individual card. Visa's pretty broad, looks great. And what about Discover? This is DFS. Same story, right? Your credit card companies oftentimes give you a good indication of what the consumer is feeling too. So just something to think about. The cool thing about the markets is that you may have your opinion, I may have my opinion, but the cool thing about price is that price is kind of the ultimate voting system. So if you want to say, oh, consumer looks horrible, the credit card companies, which are arguably one of the best way to track the state of the consumer, they look healthy. In fact, AXP is a stock I'm looking to potentially buy some in. I sold a put at 270. So that put is now profitable because I shorted a put at 270. I actually hope that AXP goes lower so I can get some more shares of that. Anyways, US stock market opened up about 10 minutes ago. Let's take a look at the 15-minute just to get an idea of how things are going. 9:30 open, pretty mixed, but stocks higher in the pre-market. Here's S&P 500 on the open, a little red, but overall very, very green here today. Russell a little bit higher. Dollar index down today. Take a look at the dollar pulling back here. I actually went long euro dollar yesterday, so this is looking okay. Went long euro dollar cost averaging approach with the willingness to add if we do get a further decline in the euro. But I do have a long position currently on this one. So, yeah. People spending on credits and credit card stocks going up doesn't mean consumer is great. It means consumer. So first of all, I'm not saying the consumer is great. I'm just saying it's much better than what people would have you believe if you're reading doomsday articles. First. Second of all, credit card companies are intelligently priced. The market's really smart. So you might say, oh, well, people are spending on credit. They actually don't. If there is a true problem in the credit card world that the market has sniffed out, which the market's pretty dang smart, if the market has figured out that people are really pulling back on spending and seriously hurting, guess what? Credit card companies will go down because what will happen is delinquency rates will go up. Companies from these sectors, the very, very in the data companies, will also forecast less growth on their revenues, top and bottom line, right? So credit card companies have their finger on the pulse of the consumer. They know really well delinquency rates. They know really well how much people have, on credit relative to that. They know their credit scores. Are the average credit scores going up or down? They have so much data on the consumer. And so if credit card stocks are drastically lower or drastically higher, it absolutely is a really strong indicator because it's kind of like a conclusive multi-data point. I mean, they have the smartest people in the world working those types of companies. They have their finger on the pulse of the consumer, and they can tell if people are way overspending, if their delinquency rates are going up dramatically, if they have way more risk on their balance sheet. They know it all. They're super smart. So in fact, stocks that are in specific sectors, especially credit card companies, they play a really powerful role in insights on the consumer. So I would actually, Ballout, I see what you're saying, but I'd push back on you and just say that actually there's no one smarter on the consumer than credit card stocks. And to me, that would be the number one stock. Some other close-up stocks that you could take a look at Amazon, right? Amazon also doing pretty well, right? If the consumer's really pulling back on their spending on products, that's what's going to happen. But people, what they do is when they really can't afford something, they pull back. If you want to talk about what's going to crack the consumer, if you want to tell me the story of, no, the consumer's hurting, I'll tell you where it starts. I'll tell you where I join your team. Ready? It's not in the data yet because jobs are still very healthy. If there's major layoffs that start coming down the pipeline, if you have a major uptick in unemployment rate, then to people who say the consumer is really weak, I agree with you in that case. That's what's going to cause delinquency rates to rise. That's what's going to cause people to seriously pull back on spending, stop buying, the latest PlayStation, doing all sorts of things. That to me would be an indicator. But the jobs market staying strong supports the consumer lifestyle that America has, right? If jobs data starts to materially weaken, if you see major layoffs, there's going to be a different story. But right now, that's not what we see. And you can make a prediction that could change. But again, I don't try and do that stuff. I don't try and speculate, the job market is going to massively sour. Those are really difficult things in economics to time and call. And so I personally just trade the hard data in front of me. And I do have a lot of, I hold very highly what's happening in key stocks that have way more data, way smarter people making decisions, or people who are pricing the stock of American Express. They're looking at everything. They're looking at the state of the consumer very closely. I'll tell you what, if the consumer starts to weaken, American Express will have already been moving down like crazy, right? So if you see American Express really start to crater, that will tell you, oh, the consumer is seriously weakening. But we're still in a very strong upward trend. We've a massive up move, pullback here recently, but I'd still say that's a healthy correction in a bull market until proven otherwise. Appreciate you, Ball Out. No, it's a great question. The point is, Ball Out, the consumer's hard. That's the economy. The consumer is the economy, right? So when we talk about is the economy strong or weak, all this data that we're looking at, all the stuff that the Fed's making a decision on that ultimately drives our trading here is based around the consumer. Is the consumer spending? Is the consumer pulling back? That is ultimately what we're trying to decipher. And that's what the Fed's using, right? The Fed's looking at, oh, if inflation rips higher for too long, it could crater the consumer. That was the fear in 2022. It's just that in 2022, we were running hot on a strong economy. Prior to that point, for the last few years, we had a decent, good wage growth. People were feeling pretty good. And had that kept going for a while, if inflation had kept going, there's a very solid chance we would have cratered into a massive recession. But Powell and team during, the last few years, I would say have done a pretty good job at getting inflation back under relatively control. I mean, we still have higher prices, but inflation itself has slowed and wage growth has picked back up. So again, you asked me how I feel about this market. I'm a bull, right? I think there's good times ahead. I'm an optimist. I own a boatload of Tesla shares right now, so I'm feeling really optimistic. But we'll see. Anyways, wanted to make a quick shout out here before we have Alan Perez take over the show here for a little bit. Just a quick announcement. We are currently doing something really cool. We're doing EdgeFinder Free Week, which means everybody who is watching this stream right now, you can access the EdgeFinder completely for free. Here is how. Step 1, join the Telegram channel. It is free to join. This is where we're going to be dropping the link today to access the EdgeFinder completely for free. No strings attached. You just drop your email. I guess there is a string attached. If you drop your email, we will ask you if you're interested in upcoming sale events. And if you say no, we won't bother you. If you say yes, then we'll send that information to you when a new sale event occurs. So there's your full breakdown. EdgeFinder is completely free this week. Check it out. Take some time, go through the data, see if it's right for you. And if you do ultimately like the tool, consider purchasing it and supporting our work here at A1 Trading in the future. Okay, up next, we got Alan Perez taking over the show. He's going to be taking a look at his top setups and ideas currently in this market, and he will be taking over just after this. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone. Or afternoon. Hope everyone's doing well. Super interesting take. I just tuned in kind of late, but I got to hear about what Nick was saying as far as looking into American Express to kind of get a gauge as to where the consumer is spending and see like the health of the consumer spending. So super interesting. Thanks for that. Hope everyone's doing good. I'll be super honest. My trading for this month has been pretty flat. Once I got taken out of my Euro short and my dollar Swiss longs, I've been waiting for entries, and I finally got some. Similar to Nick, I took an entry on the Euro. Now, I was very cautious on this one because with a really strong market like this, when there's a lot of momentum, it's really sometimes every little dip gets bought into. And so ideally, I was waiting for a dip maybe down here. But when I saw that this consolidation area was, kind of forming, then I thought to myself, well, buying at the bottom of the range that we're in, which is this area right here, might be a good time to maybe start buying. Now, could it go lower from here? Sure. So I went pretty small in my position. But I thought, buying at the bottom of this range, not bad. Ideally, if we just take a fib, we're not really at the 38% retracement. So that's why I went a little bit light on this position. Same thing with the pound. I didn't enter the pound at all because ideally for the pound, I think we discussed this in the last, we all pretty much agreed that this level would have been a very, very nice level at this 38 or this 50% retracement level. So I'm also, keeping some cash to potentially, if this thing does go lower, I would prefer to buy at this level. It'll be a bigger trade for me. I'd put on more size to kind of, um, target maybe these highs over here. Hi, Kiddis. Hi, Bashi. Good to see you guys. I see ball outs in here. The OGs are always here, of course. But yeah, this month has been pretty slow for me, to be quite honest with you, especially since I'm trading only FX. I do have like a paper. I'm trying to test some things on the equity side of things like stocks, swing trading stocks. That one's doing really well because now we see that there's a bounce back in the equities market. You see the S&P 500 is getting some follow through. So is the NAS. Also, a healthy thing to see is that the VIX is kind of stabilizing. So those erratic movements are no longer expected in the near term. So I think if we just continue some follow through, maybe we get the S&P pull back a little bit. That wouldn't scare me. But as long as we hold this level and we continue upwards, then I would definitely say we are in a healthy state. Things are balanced. There's going to be some organic movements in the market. And this whole recession, the world's going to end thing is pretty much off the table at that point, if that, does happen. We're back. Our Lambo Allen, no thanks. Consumer confidence coming in soon. So I believe, yeah, it's going to come in lighter than expected, but I'm curious to see how the market's going to take that. We know when there's a lot of optimism and momentum, sometimes the market can ignore certain aspects, like certain news events, and continue. But we'll see how this one reacts. I know we have it in about 7 minutes from now, and I'll be on to watch that. I could put it up on my screen if you guys would like to get the numbers live, and then we can go over it together. I guess what I'll do is, I know you guys like looking at the multiple markets, so I'll put that on. One thing I will say, my Swiss yen has been taunting with me. So I was in this position pretty light regardless, but I got in right here, and my stop loss was slightly above pretty much this swing high right here. And the first time it almost took me out, it was 5 or 6 pips away from hitting my stop loss, 5.5. And last night it was about 15 pips from my stop loss. So this trade has been, not contributing to the P&L. So I think we'll reevaluate what happens if price does go ahead and, let's say, it reacts off of this. If this thing turns into support and we start pushing higher, then somewhere in this, I'll manually go ahead and take out the trade for a small loss. But I'd like to, ideally, of course, I'd like to see it kind of break this level, retest, hold it, and then continue lower. And if that's the case, then I'll just continue holding it. This is a longer term play. The Bank of Japan went ahead and said that they are, trying to hike rates. So that's the backs of this, trade. Fundamentally, that's what I'm looking for. Yeah, recently JPY is weak. A lot of the yen pairs have been getting pretty beat up lately. I always reference when I'm looking at the yen. This one's the yen index. So the yen index is in a range. We see that we're reacting off of this support here. And so that's what keeps me in the trade as well. Had we went ahead and break this level, then obviously I would have been stopped out. But I would have also had, some sort of confirmation saying perhaps the trend is bearish now for the short term on the yen. But I like to look at this. It's similar to the dollar index. It weighs the yen currencies against the others. And previously we have bounced out of this level before. And so we did the same thing here. We know in the time being, in hindsight, there was a lot of momentum to the downside, but it's good to see that buyers went ahead and stepped in here. And so that's what's ultimately keeping me in the trade. Also, fundamentally, the yen wants to actively hike rates. I like how you folks are always so real. Well, thank you. The reality of trading is that it's not all sunshine and rainbows. This month was a flat month for me. I haven't even realized the profit because the yen trade is also up in the air. I am floating in profit on the euro a little bit and the Swiss, but those things just came into fruition, and that's the reality of trading, especially when I'm limited to certain markets. Like I don't trade gold. I know gold was a home run for most people. The stock market on a paper account that I'm practicing on is also a home run. Tesla's a home run. I bought MSTR. Those are doing really well. But because I only trade certain markets where I have cash allocated at, then I don't indulge in those things. 24/7 Betterment. I use Awanda. So I'm a US citizen. And so Awanda offers really good spot FX. It's a good broker for spot Forex. We got 3 minutes for consumer confidence. Thanks. I use Forex. I believe most people here trade pretty much everything, especially the ones that are outside the US that are able to use CFD brokers. And I think they have access to pretty much equities, indices, and commodities, or equity indices, commodities, and currencies as well. Looking at gold hit a good rip. If I were to be a gold participant, if I trade gold, I would look for this level here. This would be the first zone. I would go pretty light on this one with the expectation that if it breaks, the better entry would be somewhere right here at the 29.40 level. That would be a really, really good risk reward for myself. Another thing I like to see also when going over the euro trade and the dollar Swiss. So I'm currently euro long and I'm waiting for dollar Swiss. For the dollar Swiss specifically, we've been in this range, and ideally similar to the pound dollar, I wanted to get a better entry and just sell off of this resistance level here, or the zone where price has respected it in the past, and we didn't get that. So we're in this range. Trading in the range can be quite tricky because if, let's say, you just get in here and for a while you don't know how long, but price just chops around here, it could be really difficult psychologically. It could be quite annoying. So what I would like to do instead is we kind of see technically on the higher time frames. I'm sure we can all notice this head and shoulders pattern. So if we do get a firm break around here, we can go ahead and continue selling. And then my first target would be this 86.5 level. Now, a good sign for myself to see is out on the US 10-year yield. We went ahead and tapped this resistance zone, and we very much went ahead and reacted off of it. I love to see when zones react very quickly and firmly instead of just hanging around in there, because statistically, the longer a asset stays in a zone that's been respected in the past and the more it lingers, it's just an indication that buyers and sellers are pretty evenly distributed. And all it takes is just one of those things, so one of the buyers or the sellers to go ahead and come in with more force, and that will break that zone. So seeing a clear and quick reaction off of this is a good sign for me that the dollar is poised to go a little bit lower. GU, yes. Let me look at dollar CAD first. Oh, we have news here, guys. I don't want to skip that. Oh, snap. That's not what I wanted to do. Let's see. Consumer confidence came in at 92.9, forecasted 94, previous 98. We have home sales came in lower than expected. So we'll see how markets react to that. We'll look at the 10-year. Pretty flat reaction. Pretty flat reaction in my opinion. Although in the short term, like if you were to go down to the 5 minute, it looked like the market's selling off, but it's really not. Um, yeah, I think it was pretty flat. I think the market's just gonna skip right past through this. Dollar CAD. Dollar CAD is an interesting. Now, one thing you bring up a good point, Eman. Now that you've asked me to talk about dollar CAD, the positions I'm in, I'm going to be very safe with because we have April 2nd coming in, which is the whole tariff deadline thing. Now, the president went ahead and said that they're going to be lenient on some products in some countries regarding the tariffs. But nonetheless, whenever talks happened and there were dates to be, you know, put out there, those days can bring volatility. So I'm going to be a little bit careful. But dollar CAD, I think technically could be difficult to trade for myself, honestly. I would like to short this because I do think that in the short term, the dollar Canadian will depreciate. But if you look left, dollar Canadian's been very vulnerable to tariffs. And whenever tariff stocks hit the headlines, dollar CAD really reacts with strength and volatility. So I'd like to go short. It could be very tricky because you can get stopped out pretty easily if he says something crazy. So I'd be mindful. I guess the first one would be something like this. You could play it two ways. You could play it with small size, both with small size, but the first way you can play it is with a short stop loss. That way you'll know pretty fast if you're wrong. Or you can do something like this where your stop loss is super wide, but then that kind of eats into your risk reward. So it's really a personal preference to you. Um, I would like to see it break here and hold below. And if we just stay below this 4,300 level, then I think dollar CAD could be a good one to trade. My personal preference would be to short the dollar Swiss. Yeah, I've had a ton going on in my personal life. I do apologize. Canada won't win a trade war. I don't hope we go into a trade war. I'm hoping that this is a way of negotiating and getting people to the table and just getting out some I guess new deals that are revised. I believe that a lot of these trade uh, what do you call it, threats are just a means of getting people to negotiate. Now, do I do think he could put them on? Probably. Like if nothing comes to fruition and other parties are very difficult to deal with, then perhaps there could be a trade war. I really hope not. How did you end up on a guest of this channel? Well, I've been following Nick for a long time. In fact, I would recommend you guys all double check your screens and make sure you're subscribed because for like 2 years, I was not subscribed. I just realized this the other day. But I've been watching Nick's channel for a long time. Um, you know, the contributors he has on his show, like James, Ivan, Nick himself, they all trade the way I trade, which is swing trading, momentum trading, and very fundamentally focused. So, you know, their articulation and their ideas really resonated with myself. And so I stuck around for a long time. And I say that for everyone that's looking to kind of learn alongside a group or somebody, is find someone who's trading the way you want to trade or the way that, you know, it best fits your personality and stick around. And so I reached out to Nick and I was like, hey, you know, I'm a watcher. I've been making my own YouTube videos. And he was actually very kind enough to invite me on as a guest. And I've been doing it every Tuesday. I hope to do it more often. in the works of doing something that could alter my schedule. Once that's finalized and I have a clear kind of firm schedule moving forward, I'd like to be able to contribute more because sometimes the stream, it's really hard for Nick to just go on for hours and hours and hours. So it'd be cool to for myself to get on here and share some ideas, but also alleviate some of that off other people. Yeah, I can look at Pound Australian. Before I go into these minor pairs, I'm going to reference the EdgeFinder. So Pound CAD, Euro Australian, and Pound Australian. So Pound Australian getting a bullish reading. So we'll look at that one. I never take this trade. I just have this thing here as a hypothetical. I wanted to, now that I think about it, I could have marked this a little better and potentially got an entry. But I want to see the $2.30 right here. This would be a better buy for me. Now, it has moved already. So getting into the trade now at this price could be very difficult, in my opinion. The train has left the station, and we kind of have to wait. And I would assume it's the same thing for Euro Australian as well. Euro Australian, you actually could, let's say if the euro's falling a little bit faster than the pound. If the euro does go ahead and retrace to this level, then I would, if you are trading this pair, I wonder if it's on the top set of this page as well. It's not getting a strong reading, so I'd be skeptical about that. But if you want to take this trade, by all means, this level right here would be a good entry point. Any books on economics or funds or trading you recommend? Yeah, every year, this is a good one. It's called, if you guys can see it, Day Trading the Currency Market by Kathy Lean. Really good book. It goes over the fundamentals. So Kathy Lean was in JP Morgan. She was trading FX to them, or I think she was an analyst. And that book basically goes over just very high level strategies that work for her. She goes over what moves the markets at what times. So she basically goes over like the basics of NFP, finding out, in the current environment that you're trading in, which fundamental catalyst moves the market at that time. So sometimes, NFP will move the market a lot, right? Depending on what market you're trading. Sometimes CPI really moves the market a lot. So basically finding that outlier and trading that one. And then she also goes over some strategies that work, very basic high level stuff, a little bit of psychology. It's a really good, well-rounded book. It's a good refresher, honestly. She featured Nick in her latest book. Damn, that's pretty sick. Honestly, I might have to buy that. If you could drop the title of that book, I'll go ahead and buy it because I really like Kathy Lean's delivery on what she's saying. How's Australia's economy? It's really tricky, honestly, because we're seeing a lot of dollar weakness, and so ideally, you want to see also its counterparts like the Australian dollar, getting some strength there. But I'll say this: technically, it's difficult because all of the other pairs like the euro and the pound have all pretty much appreciated a lot. And if you look at the Australian dollar and the New Zealand dollar, it's pretty much the same price action, but Australian dollar paints a better picture. You see that it hasn't broken this resistance level here, which is interesting, right? It's like really weak compared to the other ones. And a big contributor, in my opinion, is that Australia is a very commodity-dependent, commodity-driven market. And if you look at the oil market, it's been depleting pretty fast. It's been trending lower for a long time now. So in my opinion, that is a reason why the Australian economy is not getting the strength that it usually would be. Prop trading secrets by Kathleen. Cool. I'll definitely check it out for sure. That's really cool. I'm curious to see or know the story on how that came to fruition, how like she invited Nick on and stuff. That'd be cool. Well, yeah, I'm sorry, I didn't answer your question entirely. Yeah, Australia is a very commodity-driven market. Um, you have oil coming down lower, and because the current president is very actively trying to drill more oil and bring inflation down that way. So that's why I see that the Australian economy is kind of is struggling a little bit. Honestly, that's why. My time is almost up, guys. I have about 4 minutes left. I think you guys have Chris Pulver next. But going over the consumer confidence that we just experienced at 9 o'clock, we see that nothing really happened. Even though the number came in weaker than expected, the market didn't really take that into consideration. We know we kept chugging along. It was a pretty, nothing really happened here. So just for you guys, what do you think about Euro US dollar? Euro US dollar. Well, you can see I'm kind of in the red slightly, probably like about 3 pips or so. Um, Lots of momentum on the euro dollar. Now that the dollar is getting a little bit weaker, I would prefer buying the euro dollar, and I like to target ultimately the 110 or the 112 because it came in with strong momentum. Excuse me. Because it came in with strong momentum, my first attempt is going to buy in this range here. If this range holds, I like to continue lower. But if we're just looking at it from a Fibonacci perspective, we haven't even hit the 38% retracement level. So looking to ideally maybe buy somewhere around here if this level fails. That's what I would end up doing. But I think for now, we could go ahead and target lower or higher, I'm sorry. And if we zoom out here, we're just in a big range. If you just look at it from here, if I just flip these red, we're just in a big range. So I'm going to play this long and target this level or this level. And once we get here, fundamentally, I want to make sure that the fundamentals are in line for a weaker euro or, something along the lines. And then I can short and then I can start targeting these bigger moves right here. That's the awesome thing about Forex and currencies is that these things trend. And when they trend, they tend to trend for a long time. Same thing with the dollar Swiss. You see, we are in this humongous trend. Oh, this is supposed to be resistance. And in the higher time frames, you see that we just react off of these zones time and time again. And so I'd like to see a continuation. Perhaps we get here, look at the fundamentals, we'll see how we are doing, and then we'll go ahead and take it long from here. Yeah, he has a lot of wisdom and he can articulate his ideas pretty well. That's one thing I struggle with is kind of putting my words out and articulating it. But we have Chris Pulver coming on, I believe so. So I'll stick around until I get the green light that he's ready to come on. Any other last minute pairs you guys would like me to look at, I'll be more than happy to do so. Dollar yen, I didn't see that one. Dollar yen, similar to the 10-year yield, went ahead and reacted off of this zone. I want to see it continue lower. If we stay under this green level that I have here, this 149, we could see some more, a bigger drop. And if you kind of just correlate that to the things like the dollar Swiss, dollar yen is, you could consider that a safe haven pair. Dollar Swiss also a safe haven pair. So if we see dollar Swiss do targeting, this bigger range, this level here, then I could also see the dollar yen also following that much. Gold, man, I really wish I was trading gold. It's really hard now. If you just look at the chart, it's pretty much coming back up. There's really no good risk or reward, in my opinion. I mean, unless you're scalping this thing, but that could be very difficult as well to do, just because of how volatile gold is. I would wait for a bigger retracement if I was trading gold. But then again, I'm a swing trader, so my trade management may be different than other people's. So if you're a swing trader, I would go ahead and wait for this one to pull back a little bit more. Another thing, VIX came down a lot. Now we're staying at the 17s, which is a good sign that the market's pretty much stabilizing. No more erratic movements for now, at least until something hits the headlines. So that's a good sign that all the stock market could be finding a bottom here. But this was really tricky. If you guys just look at it, this back and forth that we have, I'm sure that it was really confusing to trade this in real time. But I could see the market going ahead and continuing. Maybe we find some sort of resistance here. If I'm just marking this up, maybe right here, and then if we kind of drop lower, retest, and continue upwards, then that would be a good sign that the stock market's really strong and that it's no longer fearful and all this recession talk and everything that was going on. That would be a really good sign. The yen is really weak. Bank of Japan had a rate decision that they had to make. They kept rates at 0.5%. They weren't super hawkish in their statement or anything that they said afterwards. And so that caused a little bit of like, okay, is this yen really going to appreciate that fast, like the way we were going to? And also, geopolitics and everything. Well, not geopolitics, but things kind of calm down as far as tariffs. Trump was saying that he's going to take it easy on some products or some countries. And so the whole like money flowing into safe haven assets, that kind of went ahead and went away. So that's why like the Swiss kind of went ahead and depreciated a little bit, and also the yen went ahead and depreciated. But I mentioned earlier that if you're looking at the yen index, we just go ahead and see that at the moment in the present term we're in this range, and price has reacted already to this zone right here. So if this thing holds, then I do think we can just continue seeing some chop. It'll take something else for us to get out of this chop and say maybe Bank of Japan comes out a little bit hawkish, and that could push us a little bit higher. But until then, I do think we'll just continue to see this chop. If we break lower, then I think the yen trade is off the table for the time being. Where do I get my currency articles? I get them from here, financialjuice.com. You can kind of tailor it to what you want. This is like my news. You have you get a bunch of cool articles. If you just click the Forex tab, you get all the Forex articles and stuff that's relevant to this market. If you're like a stock trader, you can do equities, commodities, crypto, and you'll get basically things that affect those markets. This is a free website to use. This is where I get my news. I did buy it on sale. They had like this pro version that I bought, but it was on sale, so it was pretty cheap. I forget how much it was, but yeah. I think I just got a message. Chris is here. Well, you guys, thank you for having me this morning or this afternoon. You guys are in good hands. Have a blessed day, everybody.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Welcome back. We have ourselves a little bit of a choppy market this morning. Bulls are probably still looking to get a little bit out of this market. I would hope they're able to push up into the 5,800 level, maybe a little bit higher. Be warned that there's probably some bears hanging out in this like 58 to 58.50 zone. So just be mindful of that. I wouldn't mind seeing this melt up. I'm watching some trades. I've got some bull call spreads working out pretty nicely. I've got some credit spreads working out pretty nicely. Some trades in here. Looking better, looking better, looking better. A lot of these I'm just going to be managing through this week. This one's not awful. If we hang out, I mean, I could probably just take the profit in this one here and move on. Same thing here, but another day or so, probably not looking awful. This one is fine. Oh, I'm going to close this one out real quick for another win. 25-cent debit, fine by me. How'd you not close out? I got the automatic trade, 26. All right, I fill at 26 for a winner. Very good. That one, I'm going to watch these for, if we're just staying somewhat elevated by either a push up higher today or by the end of the week. If we're still above like the 5, let's say, pretty smooth sailing there. I just had a conversation in my previous session on a little COVID action. Here's what I'm looking at. So doesn't have to be crazy complicated. Here is a high. Here's a low. We're kind of right back into this harmonic merge level, which is potentially where these bears can hide out. I think more of the level I'm watching is going to be the 50% pullback zone, which is not that far away. So the bulls could still climb. We have a pretty solid gap right there, as well as that Thursday to Friday. Today was not much of a gap day. We just had a retest of it, so it's pretty efficient. But here's the 50% zone. So we pull back in this 50% zone. We look left on the chart. There's lots of previous lows back here around this like 55% zone. So let's just say from 5,800 to around 5,850. I could see the bears hiding out in there for a potential scratch of the market. Where to? Well, they can certainly pull back into this area to retest some gaps. But if we're able to at least get there first, I want to kind of assess my current positions to see, are there some more profit levels and profit targets I can take if we hit that equilibrium. So I'm going to set a chart alarm here around 58.20, and that's just in front of my 50% pullback level. So coming up to 50% pullback zone. That gives us just a little bit more drift. That allows the volatility index to continue to drop and settle back in. We've gone from 29.55 or 29. What's the high here? 29.57 on the VIX, all the way back down to 17. That's a pretty nice retreat on the VIX. 42% decline on the VIX. Now, if we were to turn all of a sudden and head back up, I mean, look left on the VIX. We've seen elevated VIX, but it's been settled here around the 15 or 16 handle. Okay, so going into this like 15 handle, it's like I'd love to see the VIX continue to sell off a little bit more, get us into this like 15 handle, come back into the early parts of the year where we had, it's certainly not 11 VIX, it's not 12 VIX, but having a slightly higher like 14 to 15 VIX would make some sense. So if we can just push a little bit lower on VIX, get back into the 15s, that would kind of reset this instrument, which I think would make some sense. So hopefully there's a little bit more downside in the VIX, which means slightly more upside in the markets. All right. So let's go a little top down today. Let's go currency strength. I'm curious how this changes for the week. We've had 4 pretty terrible sentiment readings, which is, I've said this many times, but sentiment is not necessarily a signal, but I think it was a wise play to be taking some bites, taking some nibbles in the markets as this did sell off and we had some terrible readings. You had, for the first time in many years, you had the Dow, the Russell, the NASDAQ, and the S&P all hitting oversold conditions. You had sentiment readings that were as bad as bear market territory like we saw back in 2022. You had the volatility index up at, inside the 10th percentile of volatility highs. Nearly hitting 30. It's like usually something happens around 30. You can either have like that one-off spike above and then a hard reversion, or from elevated high 20s into 30s, it's like the market usually fades. You can look back a lot of years when you've seen 30 VIX. It's like even through 2022, COVID obviously had its bouts, but that was just elevated volatility in general after like the largest spike we've seen in VIX. But yeah, when you're in like the 30s, selling premium is pretty good. Here's your volatility event in December 18. Here's your volatility event in January, February of 18. Those were one-off, coming off of super low volatility. Then you're coming back into 2015, 16, where the market actually had like a 20% correction. But you can see just how this instrument is a reverting instrument. What I noticed on the VIX term structure yesterday is we did return to contango. So now the risk is further out. Instead of the risk being where this VIX term structure is higher volatility in the near term, this is now back in where it kind of typically shows, which is contango versus backwardation. So that's that. It's like all things are kind of returning to normal. I don't think we're done. I don't think the bears are done. I think the bears are potentially lying in wait, and we're going to find out where that is. But that's why I said, to me, this is like that 5,800 handle, 5,850 handle. If the market can just drift up a little bit higher, I think that's great. I don't think there's really any major catalyst to turn the market this week. I don't know what would be okay, let's look at the calendar. Today, pretty quiet. Tomorrow, durable goods is medium impact. And none of this really matters, I don't think. Unemployment claims, final GDP on Thursday, maybe. But if it's positive, maybe that's that final little push to the upside before, core PCE on Friday. So I think if we don't have a lot of disruption, maybe Thursday, Friday, the market's like, okay, bulls have had their fun, bears can come back, but I'd almost expect to see the news in line with something bad. We'd have to have higher unemployment claims. GDP would have to be a pretty big miss. And then Friday's core PCE. Let me see if it's on the Bloomberg calendar here. Oops. Looking pretty good. Bloomberg for Friday. I want to see what the forecast is for the core PCE. Do they have it? So we got year-over-year core PCE with no forecast, year-over-year PCE with no forecast. Well, that's annoying. Personal income, personal spending, month-over-month forecasted at 0.3 to stay the same. All right, core PCE. It's one of these in here. This one, 2.6. So Fed rate still 4.25, 4.5, changing likely this summer. June is expected rate cut. Still around 2 cuts this year is what's expected from the Fed. If core PCE is the same or slightly lower, that's probably a good thing. If it's lower, that's probably a good thing. Let me take a look at Trueflation for a second. Okay. So we're going a little bit higher. Is it unreasonable to think that, the Fed's 2% inflation target is going to be nearly impossible. I think if the Fed would just say that we're willing to tolerate, it's no longer like 2% inflation target, 2% inflation target, but rather 2 to 3%, 2 to 3%. Like they're clearly allowing it. It's like they're being more reactive when it comes to higher inflation. They're kind of hoping that things just naturally take their course, but I just think we're going to be in elevated inflation territory for longer. 2 to 3%, I would say is manageable. It's not super scary, but it's just so far off from what the Fed is telling the market every single meeting, every single FOMC minutes report, every single Fed. It's like 2% inflation target. I mean, we had a 2% inflation target when we had deflation. So I don't know. I don't think the Fed is going to be that hawkish, because in order to probably get to 2% inflation, we probably have to see an overshoot, right? We'd have to be at, we'll just say we're sitting around whatever. We're just gonna, let's just take this, okay, 2.6, or the headline CPI at, what's headline CPI? Core CPI. So core CPI 2.2. That's core, so you exclude food and energy. Okay, headline CPI, US headline CPI 2.8%. Okay, so this right here is going to get down to 2%. We're a long ways away from that. In order to get there, Fed has to not cut rates. We probably need to see a slowdown. I don't think, I mean, from a historical context, stagflation is a long ways off. Unemployment, unless we see a big uptick in initial jobless claims or continued jobless claims, we're not seeing really anything too scary in the labor market right now. So anyway, we're a long ways away. So this is what I'm talking about. The Fed, maybe for 2.5% can say, okay, things are going well, but as long as we're less than 3 and we're trying to target 2%, like, okay, have a realistic conversation of where things are at, because there is a cycle of inflation. It can't just be inflation just goes straight down, right? I mean, we've seen it. You can see the EdgeFinder tool. If you go to CPI, any of the inflation data, I mean, you can see from core PCE to PPI to CPI, a lot of the inflation data has been very sticky. So we are in the same area since literally, summer of 2023. Okay, sideways, a little bit lower, trended higher. We're sideways again. The histogram is finally improving on this one data point. Hooray, we finally trended lower for 1 month. But we're really no different a year later. A year and a half later, honestly. So not that great, but the narrative isn't changing. So, I mean, inflation does improve if the economy is slowing down. The 10-year yield, I think this is also going to be something sticky, and just quick conversation on this. We'll do top down, but not going here is probably good. Not going here, I'd love for the 10-year yield to drop. I really would. But I think in order for this 10-year yield to drop, we would have to see a bigger decline in stock market, more risk-off trading, and probably consumer spending freeze and potential threat of major slowdown. So I think that as much as the 10-year, the government may want this. I mean, sure, consumers want this. I'm sure like any type of refinancing coming later this year wants this. I want this as, closing in a house in a month or two. I want this to be as low as possible. But I think in order to get this lower, the only way we made progress on this 10-year yield is by what happening. We made progress on this 10-year yield by the market falling hard, fast, and so in order for us to get another significant chunk out of this 10-year yield, you're going to have to see a bigger stock market decline. So I don't know if we're going to get that. If this market's like, hey, the bottom is in and we're going to go back up to, all-time high, maybe. If we get back to all-time highs, this 10-year yield's not going to go lower. So I think the reality is, like, we have the high for the year in early February. We put in our intermediate low just these last couple weeks. And that 10% swing, I'll just talk SPX for a second. So that about 10.3% swing. If the market finds equilibrium and can't quite break highs or lows, okay, well, then this is going to stay right where it is. And it's, it's not breaking the bank, but it's certainly not getting better. So maybe that's our normal. Maybe this is just an absolute grind fest for the next maybe 30 to 60 days. Now, seasonality wise, having a high, having a low, the market starts to pick up and we can kind of, fight through Liberation Day and the tariff talk is a little bit softer. Maybe the market takes that as a good thing and we do get to all-time highs again. I'm still pretty darn cautious that all-time highs don't have a ton of momentum behind it. So I'm going to reallocate, rehedge. Yesterday was a really active day. I'm now up to around just shy of 50% of my portfolio is now cash, which is good. That's where I wanted it to be. So I mean, I've got plenty of cash to deploy, trades to close up for more profit. Positions are looking fine, but I want to be still defensive. I want to be cautious. I want to have cash at the ready in case we have other volatility events. All right. So as much as this to go lower is going to be very difficult, I think at the same time, this would be the most frustrating if the 10-year goes higher, because this could be a good run for the market. Like the markets could go higher, assets could appreciate, but then we get into a bubble. And that to me has bigger implications, ramifications, and consequences that all of a sudden, like this move for a correction is not just a 10% buy the dip. This is a 20, 25, 30%. Holy shit, we're in a market correction. Right? Like that's my bigger concern, is that we get into another bubble situation like we had in 2019 that crashed in 2020, like we had in a deleveraging in 2022, and it doesn't stop at 20%, doesn't stop at 25%. Like, I mean, I put this in context and then we'll do some more analysis here, but let's just go perspective. Let's go summary. Just go bear. Is it drawdown? S&P. There it is, drawdown perspective. Here you go. So intra-year decline, we're talking like bigger picture, right? So a 10% pullback happens about 64% of the time, and it happens every 1.5 years. Okay. It happened in 2024. It happened in 2025. Well, there you go. Checks the box. Pretty accurate. I'm talking about the bigger stuff that's way more painful. But this pain, by the way, 15, 20, 25% pullbacks, they happen very infrequently, right? Anything higher than that, obviously very infrequently. But realistically, a 15 to 20% pullback every 2.5 to 4 years, we're kind of coming up on that. Because a 20% pullback last time we saw it was 2022, right? So is it spot on where it's like, okay, 4 years, let's get ready for it? I mean, obviously it doesn't have to happen, but if our last 15 to 20% pullback was 2022, and we have another one, let's say late 2025 or into 2026, I mean, it's not a high probability, but when it does happen, it typically offers up really good opportunities to be braced for a downside move and also positioning for the ability. So, you look at like Warren Buffett saying is like, don't time the market, you can't time the market. Well, if you're paying attention, it's not obviously easy to time the market. But what is a little bit nicer is like having some cash at the ready, where if you do have this correction, man, it's nice to have the cash ready to deploy at these bigger correction levels. I, for one, like to sell a bunch of premium during this time when the volatility is high, and a lot of those trades work out very nicely. But also going out far enough where you can kind of position for the market, give the market time to find its lows, give the market time to bottom out. And you got to, I mean, you never know how quickly the market's going to recover, right? A lot of times this market has been spoiling traders with this: a correction by the dip, a correction by the dip, right? A 10% slide. Even this, look, we bottomed out 10%. We had a couple days of indecision, and then we had a gap, and then from there it has been going higher. Like this still is barely making traders wait, right? This is a lot different than in 2022 when we had down and up and down and up and down and up and down and then down again. Okay. And then it finally bottomed out over here, but it took months to then carve out that low. That is a lot different waiting game and experience to be patient on the 10% pullback level, 20% pullback level. You know, that's harder. It's way harder. But you got to be picture like, you know, 6 months out, 12 months out, you know, see the light at the end of the tunnel, and yeah, the market can get through it. But I just think it's amazing how traders have been so instantly gratified by V bottoms. It's crazy. But that's what the market's been giving us, and these cycles are happening faster, and it probably will continue to offer that with zero DTEs and this combination of, you know, institutional buying and retail buying, and you can do it every single day. So what does that do? It just makes things move faster. So anyway, we'll see. All right, let's go top down. So we are green on the day just by a little bit. SP up, SPY is up 0.34, SPX up 0.28, NASDAQ 0.46, Q's up 0.49. Let me talk technicals here on the Qs. So we're just above the 200 moving average. MAGs also back above the 200 moving average. This is a good sign. I think this is a great sign. Let's go MAGs for a second here. I don't even know where to draw a fib from the bottom, honestly. I really don't. Like maybe, I mean, this doesn't go back to 2022. So I guess the better trade would be this on MAGs, just for a high to low. If we're going to say that's our flush to the downside. See where this thing pulls back. So there's room to pull back to the 30%. There's room to pull back to the 38%. There's obviously room to get back to equilibrium. So if MAGs can lead the charge for this additional comeback, then to me that means that the whole market can lift. Yesterday, advanced decline was pretty good. We had like 71% of stocks advancing yesterday. A little bit more mixed today. 45 declining, 47 advancing. But if, you know, MAG's got above the 200 moving average, we have another move higher. Like we can get to this is such a cheap ETF to play, by the way. At you know, 45, like they're good companies. They're good companies. I think the problem is are we going to get exponential growth, or are we getting to like the maturity phase of these? I don't know. I mean, we just had like a very harsh lesson in concentration. Every portfolio, every 401k, every index, super biased and concentrated in just 7 stocks. The market clearly needed to broaden out a little bit, and it did so like we discussed in the very beginning of the year, which is the market can broaden out with the downturn. That's what happened. So now if the market is going to claw back more, you know, with more bullishness, it hopefully claws back with a fair distribution. And it's not just Mag 7. You know, even though the PE ratios of Mag 7 did rebalance very quickly, it did make the overall market a little bit more attractive. So anyway, but we're drifting higher today. Dow is up 0.23%. Russell is flat on the day. I did take some profit on IWM. I think I closed out most of these for the week. I had a couple expirations out to late March and into May. And I think I closed both of these out, but let me double check that. So IWM, I think I have some shares only. Yep. So just the shares and a covered call. But I closed out these 2 trades for profit. So this one closed out. This one closed out. Took about, and a lot of my trades yesterday were anywhere between like 70% of credit, and some of my like 111 trades were like 100, 110% of credit. So I mean, I had a bunch of good profits yesterday. These trades are closed. So this one, close winner, and close winner, and I don't have to wait to expiration. Let me double check on all accounts for IWM. Just shares, just covers. Yep. So I closed out all those premium trades. Good. Copper. I should have a silver trade that's closing out here tomorrow. Yep. So I've got silver up around $900. That's silver futures. That's gold and silver up $3,000. Let's take a look at gold, silver, oil, dollar, all that good stuff. We are melting up a little bit higher. Volatility index, again, heading down. I'd love to see this settling into like $15 or so, 15 points. Son of a biscuit. Well, maybe next time. I wanted to, I mean, if you remember being in the session with me, I was looking at selling some puts on SPXY. It was a good trade. It's I have to be willing just to buy the shares. It's not a margin instrument. I had to be willing to buy the shares. Nothing crazy. Like if I bought, 100 shares worth and it's up $4, make a few dollars there, that would have been fine. But yeah, maybe next time. Dollar index. Is that it? I don't know if that's it. 1 hour chart. Let's go to the 4-hour chart. So this is still my inefficiency zone in the dollar in here. It's possible that the dollar is going to turn, sooner than later. But I'd like to see a bit more of a pullback in here towards the 144 to 200 moving average. I'd like to see the dollar pull back into that inefficiency area, then look for a trend line break. So maybe a little bit more of a chop to the upside on the dollar, and then this thing can turn over. So I still do like with stop losses above this recent high, above this trend line high. I would like to see if we can line up like a nice high reward to risk trade on the dollar. So euro dollar is probably my better position on that. If you want to trade Aussie dollar, New Zealand dollar, that's okay. I wouldn't do pound dollar. I don't like pound dollar very much. I think euro dollar looks a little bit cleaner. But based on the daily chart, just watching this big like 3-day sell-off, that was a monster move. So we pull back into here, pull back into here, pull back into here. Any type of shorter trend line confirmation, stop loss above the outer trend line right here. I think that's a good spot. If we continue to drive lower, good. So if you get a good entry, I would be watching. I'll flip this over to euro dollar. So I'd like to see a bit more of a pullback. Again, you can see that area. So is it something like this, enough to connect the trend line? We get on the right-hand side of the trend line, start to head higher. This would be my profit target. If I'm going long euro dollar, that's my profit target. And hopefully risk-wise is we get a turn. We're looking at like a small risk to a favorable reward. Not too bad. Let me go currency since we're talking about it. Still long Aussie CAD. Aussie Swiss still stacked up. Aussie yen. I had a trader ask me yesterday, like CAD yen, New Zealand yen. I keep saying this, watch these like flash crash lows. The market is responding off of this. Just be careful. I mean, in general, just be careful in the yen. We don't, I guess the one talking point in the yen would be, is the Bank of Japan going to be raising rates again through 2025? I don't think that's in the plan right now, but they're sitting at 0.5%. If they raise to 0.75, if they raise to 1%, that does threaten this whole idea of this like easy money carry trade. It is like, that's a big threat, because now all of a sudden your swap and your positive rollover is going to be negligible, because you have other central banks like, look, the Fed's going to be cutting this summer, right? Bank of England's probably cutting once or twice this year. Bank of Canada's already cut a ton. New Zealand's cut. Australia's cut. Eurozone, they've cut. It's like, if you have one bank that's going higher in interest rates while others are falling, I could see, I mean, it happened last year, and it was like the preview of maybe this is round one, right? Round one, and then it's just a bunch of noise. But if we have a round two, does it actually go to a higher low? Is it this? Is it, round one, a bunch of noise? Okay. Or is it that, right? Do we come all the way back up and just have like an obvious like tell repeat? And this is round one, this is round two, and it's just like this super kind of nice technical. I mean, I don't think so. That'd be like the perfect environment for that to happen. But if we have a swing and everyone's just kind of waiting and thinking about it, and this ends up going lower, well, this is easy. This is a high to low. This is a lower high to lower low. But that comes at a lot of risk. Like that's a big risk off flow. I mean, that scared the heck out of the market last year, right? It could do the same thing again. But I also think that we would have the heavier degree of deleveraging if we have another round 2 of that with the Bank of Japan. Aussie New Zealand, I'm still going to hold long here. I don't really love this trade at all, but it's postured for maybe a revisit of the highs. We've been making higher highs and higher lows this entire time. So I'm just looking for something like that on the Aussie New Zealand. That structure plays out. I do like this sell trade. If we get back to these highs around 114 or so, I love that sell trade back down to like 107 or 106. So I'm just going to hold the longs right now and see if they get back up to recent highs. That'll be kind of a profit target for me. And then it's no trade, maybe sell high, and then definitely buying low. But in the middle, it's like this pair is awful. I actually take that back. It's one of my favorite currency pairs when it's at levels I want to trade, but it looks like it's just a chop fest. Aussie New Zealand, no trade. That trade is done. I close this one out, so I can delete this. I'm still going to buy this thing around 6,000. CAD Swiss got some stacked up levels to the upside, trying to get back to 6,500. CAD Yen, again, watch your flash crash low. It's responding off of that. Just use stop losses, use a good trading plan, align your time frames. Swiss Yen, no trade. Euro Aussie, we talked about a short-term top coming in, high, low, lower, low, even pulling back to like the 382 or 50. So there's probably some opportunities to still be short on this one in the near term. I'm not in it. I'm just saying, like, once we put in a high to low, look at a little swing trade, try to find some equilibrium. Euro CAD, no pullback, but possibly same type of thing. There's a low, there's a high. If this pulls back at all and then sells off, you go back to previous resistance becoming support, maybe around the 50% zone. Not a bad spot. So a lot of these kind of silly looking runs we saw for a couple weeks are going to balance. Euro Swiss, it's fine. Still going to stack this thing up towards 98.80. Euro pound, no trade. I'm out of that one. I bought this thing at equal lows, took it up to the 200 moving average. Euro again, no trade. If you bought this thing at July, August lows last year, that worked out great. That was up about 700 pips. That's it. I mean, if we get a chance to do it again, if it comes all the way back down, you hit the lows again, look for some confirmation. That's not a bad trade to get some higher reward than risk. Otherwise, I don't think there's a good trade in this at all. If you're paying attention on the shorter time frame, maybe that trade. If you confirm it, stop loss above, go back down to the lows. Just as I warn, is just be careful on yen crosses. You're New Zealand's. There's a low, there's a high. Is it going to be just a pullback to equilibrium? Well, there's lots of resistance in here that could become support. So a little bit more downside could make some sense. I think a short-term alignment for some scalping might not be a bad thing. Euro dollar, I'd like to see a bit more of a pullback. Bit more of a pullback into here, get a nice little trend line break, and then look for more upside if we get it. This 107, 106, 105 zone, if it holds, I think that looks great. It really does. I'd be really, really surprised to see the euro dollar get back to parity. After this type of move, after that type of drop in the DXY, I'd be really surprised to see parity. It certainly looked doable when we were down to like 102. I'm like, okay, well, any pullback here looks good to sell. Didn't happen. So, I mean, I think it's flipped quite a bit where this market now taking out this high, retesting. I think this is a very strong support zone. And to me, this is resistance. So if you can find some opportunity in there, I like that trade. Pound Aussie. I mean, maybe equal highs. Maybe a little bit of chop fest up here. I don't like this one as much. I think the Euro pairs are better. Euro Aussie, Euro New Zealand, Euro CAD, even those are a little bit cleaner. Pound CAD starting to turn a little bit. Pound Swiss, I'm still holding long. Pound Yen, no trade. Pound New Zealand, same. I think Euro pairs are better. They're structurally, they're a little bit better. They're cooperating technically better. Pound dollar, not interested. New Zealand CAD, just buying all the lows here. So any equal low, buying, any equal low, buying, take it back to a range high. So if you buy low, take it to the halfway point or take it to resistance. It's just a big range. It's not too bad. Euro dollar is a better trade to me, James. I think it's easier trade. Pound dollar, I mean, right now it's like, what are you going to do with it? I say that because I think the Eurozone is willing to do a little bit more fiscal policy than the UK. I think the UK is also experiencing higher inflation. UK is certainly more in like an island economy, meaning like they don't have all the crazy support that they did when they're in the Eurozone. Brexit was a very real thing, and the UK is operating its own 2 feet. And I think the Eurozone is slightly better positioned with Germany kind of coming off their austerity measures and willing to spend more, whether it's all defensive or it's going to be something in just the entire Eurozone economy to benefit. Like Germany is enough to like lift the tide. So I just think the UK is in a little bit rougher shape economically than the Eurozone. So I think Euro is a cleaner trade. Okay, Euro New Zealand. Yeah, little retracement. Look for like a 50% pullback on that recent swing from low to high. I'm going to get rid of one trade really quickly on SPX in case we're going to climb. Actually, no, it's fine. Okay, just watching this. Spot checking there. I've got this pending order for a broken wing butterfly. It's probably not going to fill today. This one's in for 55 cents, and right now it's trading at, see here, closer. It's crazy how I'm taking on heat with this trade that's like 20 points higher than my sell put level. That one's in profit. 76% of my profit is available. Need a little bit more time. This one's okay. So I'm up 55%. I'm up 76%. I might manage those by the end of the day just to take these off the table. This one is another waterfall. There we go. I've got a trade in on SPX today. So it's the 25th right here. So that's a broken wing. This one is a waterfall trade. There we go. So this trade yesterday was up around like $60. Now it's up 115. I like this a lot, and I'm up about 62 points. So I'm going to possibly close this one out for profit. That would be about a $200 winner because I had a part of this was a bear put spread, which was a profit trap. I grabbed 110 bucks out of that, and then I've got 115 right here. So a little bit. I mean, this goes out to Monday. So honestly, unless we come all the way back down to 55.10, this trade is not threatened. I've got $183 on this trade. I might just let this one run through the week and evaluate this like Wednesday after market or Thursday. We have GDP news on Thursday with jobless claims. We've got PCE on Friday. I don't think that's a massive mover. But like I said, I'm a little cautious where those bears can step back in. So, all right, just keep an eye on things. Okay, New Zealand CAD, we did New Zealand Swiss stacked in, still trading really small. Looking at this area from this July, August low last year to offer up a bottom. This would be an excellent trade just to watch. And once you get on the right-hand side of this trend line, I think, honestly, I might add more positions in here if I really like it. But just waiting for a trend line to break, waiting to see if this double bottom area holds, waiting to see if the bulls can take out a recent high. If the bulls can take out a high, then my structure changes. And yes, I will be adding more positions here. I think this is a double bottom trade where we have a low, we have a high. I'm getting back to this recent high for a profit target. If I double that move, we can come back obviously a lot higher than that. I really would love to see the New Zealand Swiss get back to 6,000. So, but the way to measure that would be, let's say we have a 1, 2, 3. Well, I'll go 4, 5, and then I'll try to take like all my profits on a fifth wave move. But that wave structure hasn't happened yet. New Zealand yen off the lows. That's about it. Just be patient on that one. New Zealand dollar. This trade's done. I'm out of this trade. I'm still willing to buy this New Zealand dollar at this major support. So between 5,500, even down to like 5,000, I'm willing to scale myself into New Zealand dollar. I don't think there's not a lot of like lower lows here. I mean, this is 4,900. We saw obviously major bounces going back to like the initial retail price at 2002 and 2009. I don't know if we get there. Like this low might be the low, and this market may head back into like 6,400. I mean, heck, it might even come all the way back to this range level around 7,200. So what I don't have yet is a bullish price pattern. That's the one thing I'm missing, right? So I mean, if this was a kind of a cup and handle look, like maybe that swing trade's an opportunity. If we come back in and like retest the lows and that rejects, I mean, one thing that'd be nice about the New Zealand dollar would be, let's say we test the lows. Well, if I put in buy stops and price goes lower, I don't get filled on buy stops. But if price bounces back up and all of a sudden we get this nice little wave coming back into range levels, you can get filled on some buy stops, stop loss below whatever U-turn that is, and then hopefully we see like another wave of dollar weakness. So I still think this area looks pretty good. This is strong support from 2020, 2022. If it went any lower, I'm still interested in buying like crazy lows. So like I said, if this came back to like 5,500, I would be willing to scale in all the way down to like 5,000 and just trade this thing really small and then get like a big, I mean, I would be surprised to see like 1,000 plus swing. Okay, dollar CAD. No thanks. I had my fun. I had my trade. I'm out. Dollar Swiss. I'd love a pullback towards equal lows. 86, 85, 84. If it loads back up, I'd love that trade back up to a range level. Dollar yen. I mean, if a weaker dollar prevails, this is one trade that, this is possibly going to give you the clues of maybe the Japanese yen deleveraging if we have something like this. If we pull back here and it starts to roll over, because then we have a symmetry swing, then we have a move back down to the lows again. This would be your high, this would be your low. If you can line this up for another leg lower, what potentially is a better trade would be this high to low. You have a topping pattern in here, but you project this move down to symmetry. So high to low, lower high to lower low, that's the yellow box. The hard part is how do you time this trade? If this is just a slow grind to the upside, it's like just wait for a clean trend line break and hope that this thing wants to push. If it doesn't push, be prepared for chop, be prepared for maybe retest the same high again. Like, don't call this thing without confirmation. Okay. All right. Let's go oil, gold, silver. Dow, I mean, it's same thing as all the other indexes. US 30, that's your Dow play. So, I mean, where are we pulling back to? Got a 50% zone right around this 426 handle, 428 handle. So if you go US 30, there's some decent support in here. Goes back to August of 2024. We go back a little bit lower from the 2022 bear market, out to there with that 2023 pullback. And that's like way outer trendline stuff there. But so far it's holding up. I think we're going to be struggling to make highs, but the market may put in, I don't know, this might have what it takes to get back to these highs again. It's going to be a tricky environment. I don't know. I'm not 2026, 2027. I'm going back to this thought here. Where's my screenshot? Oh, well, the bear market, like every 1.5 to 2 years, every 3 to 4 years. I think this market is going to face some problems. Doesn't mean I'm not bearish. I mean, obviously bears can wait years and years and years to be proven right, and they can still lose. So I'm just looking at it as have cash at the ready, trade defensively this year, grind it out, a lot of active positions, good mechanics, good probabilities, and that's hopefully how I survive the year doing really well. And that's, I mean, honestly, that's every year. It's like for you to say like, oh, I bought the bottom and I called the top. It's like, that's impossible, nearly impossible. That's not my job. My job is like, if I can get the lion's share of the move. So let's say that, okay, this decline was, okay, I'm taking some nibbles. Well, if I get that right, cool, I make some money. If I'm cautious at the top and the market does head back down, okay, well, hedging works out pretty nicely. So just pick your battles, tops and bottoms, very challenging, very difficult. Certainly the bull markets can stay longer than people think. The bear market can come and be uglier and nastier than people think too. So it's never going to be a game of just trying to get it perfectly like spot on. It's more of the game of don't do anything stupid, survive like anything you think the market can throw at you, prepare for like worst case scenario. This is why I trade defined risk. I think worst case scenario is like if we have a 20% dip in the market or a 50% dip in the market, can I survive that? If I can, it's because I have defined risk, so nobody knows. And because of all the emotions and all the noise and all the flows that come in now every single day, it's like 55% of all option volume is daily. It's like this market it's like a goldfish. Like today, it's all today. Everything today matters. It's war, and then tomorrow it's a new day. So it's really weird how this market can just kind of have like these wild like day-to-day cycles when in the bigger picture it's kind of the same thing. Bigger picture, stay long-term oriented, be bullish. It's proven over nearly a century to be pretty lucrative. It's not going to come without pain, but if you give yourself a 5, 10, 20-year horizon, there's ways to make money in these markets that are, why wealthy people have stayed wealthy. I do wonder if Bitcoin, just on that quick conversation, it's like, is Bitcoin that asset that allows people to catch up? Those that haven't had the money to invest and they, only have $5,000 or $10,000, not hundreds of thousands of dollars, but Bitcoin's performance is good enough that the returns have just allowing traders to compound and catch up, maybe, but now Bitcoin's a little bit more securitized. It's certainly a lot more correlated with risk appetite. So Bitcoin trading around 88 right now. We're still not on the right-hand side of the trend line. I still think if the market's going to have like another claw from the bears, that Bitcoin is going to be, facing another test of this like 75K support. I'm a much different bull on Bitcoin if we can break this trend line, right? I mean, if we go up here and then head back down, probably the market goes with it. If we stay in here, but we break this trend line and we hold this resilience, and this is resistance becoming support, then yeah, I'm a much better buyer there. But I also wonder, like, is this going to help time the broader market? Because this is a poster child for risk appetite. Okay. So, all right, I'm going to go for just a couple more minutes. Let's do oil. I still don't love oil, to be honest. I think that the U.S. right now wants to see lower oil prices. They want to drill. They want to deregulate. That could be this catalyst to driving prices lower. I don't know if this gets uglier, by the way. I mean, not all countries can operate with cheaper oil prices. So the U.S. wants it. Saudi Arabia wants it. That would be a market share play if they got it. But, U.S. wants lower inflation. To do that, driving energy prices lower would certainly help. So I mean, there's a chance, and this level has held up nicely. Like technically, this has held up nicely, but that's a short-term play to me. I don't see oil making new highs. If we're lucky, it goes up and makes another lower high, and this still continues to be this type of structure. And if it just keeps beating the floor, at some point, I think this floor breaks. So my trades on oil. I mean, if you're in it, there's trades. There's a lot of indecision. It's a lot of chop. It's lower volatility. Strangles work well in oil futures. Mechanically, ideally, as you go out like 45 to 50 days and you manage at the halfway point. So about, 20 to 25 days left in the trade. If you're in profit, take your profit. That's one trade. The other one I talked about was doing like a option trade, just like a bull call spread, trying to find the floor with a bit of asymmetry so you can, risk $200 to make $250. And if it works out, grab some partial profit or whatever, be done. That's about it. But I think in the bigger picture, it's like, I don't think oil has really any major direction to go outside of just breaking the lows. I think it's a lot harder for oil to have a big bull market. Oil to me is like, once we break this floor, that's where it gets ugly. Like we break the floor, we're talking oil at 60, talking oil at 50 and change. I mean, how low does it go? Well, we know it can go to zero, because it did. So just it's very choppy. But I think in that, in the trenches, if you want to trade like actively, it's like strangles, iron condors. They work pretty well because it's such a choppy market. It works out okay. I'm still going to hold natural gas long, and hopefully this is officially rolled into a bull market. It's just a matter of getting the pullbacks. Gold, 30.24. We've retreated off the highs a little bit. This is good. My position on gold futures is looking pretty good. Let's go gold futures here. So I'm up $500. That's actually like most of my profit is achieved. So let me see if I can close this thing down. I'll just take the profit and move on. So a 10-cent debit. So that gives me $1.10 if I close this thing out. Let me see if it'll close out at 10 cents. So a 10-cent debit. Actually, yeah, it's not going to take. It's only 30 days away. Probability of profit is really high in this trade. Right now, I'm sitting at about a 91 to 94% chance of keeping my 32.50 call profitable. Gold would have to do something very atypical to make a run and threaten that position, but I've got a profit trap. This is what the trade looks like. So this is current price on the futures contract. I do have a profit trap a little bit higher. So this is a $500 profit trap. And then my risk on the trade is all the way out here to the 32.50 zone. So, out of the money percent, like I said, is very high. Only 30 days left in the trade. But the nice thing is I'm already seeing a majority of the profit, and I'm getting a bit of a ramp up on the out of the money. So I'm just trying to close it out. I mean, I can just close maybe at I don't know if I can do a zero. I can't do like a zero debit. I could do a 10 debit, but then I'm taking a little less profit. So I'm just going to, I don't know, I'll probably look at it by the end of the week. But right now it's like the trade I took initially was $1.20 and it's trading at $1.25. So it's fine. I'm actually up 100. I mean, it says I'm up in profit, right? Like it says I get a little bit of profit trap right there. I'm going to see if that will fill, and that would give me $130 a contract instead of 120, which is what I took in initially. So the trade is good. It's just, can I get it to close out where I want? All right, that's gold. Silver's having a pretty good day. Happy with that. I want to see silver continue to make higher highs. I do have some covered calls on silver, if I'm not mistaken. So shares covered at 35 in SLV, bull put spread right there, and then a diagonal spread, which is the 15 by 34. That's a $19 winner for a 1389. This is out to 2027. So like long-term trades for me, UNG, Pfizer, TLT, SLV. Those are long-term. Like I'm trading basically calls, a long call out to 2027. And then every 3 months or so, I'm selling a call against it above my break even, trying to grab some income. And yeah, I mean, that diagonal spread's up $580. And with a 3 contract trade, I think my max here would be, that'd be 19. Do the math. So 1389. That and 3 contracts, I make $1,500. So I'm up about 33% of my trade right now. But it's out to June. So anyway, but silver's looking fine. Technically, I really like silver. I'd love to see silver heading higher. I'd love to see gold heading higher. I just want to see gold get a pullback. Okay, Bitcoin we talked about. MicroStrategy up into the 3s again, 338. I would be totally fine if Bitcoin is looking more resilient. Bitcoin's higher, markets are higher, then I'll probably do another roll or two on this one. I have 300 shares of MicroStrategy. Break even is at 263. Even if I get it called away at 310, roll it out again, maybe a week at a time, and see if that will, offer up another $1,000 to $1,500 of just income on just rolls, like rolling the covered calls. Coinbase. This one I'm watching for this week. I need it to stay above 195 to avoid assignment. There's an income trade right there. If it's hanging out right around this, it's a 205, 20. Yeah, so this is actually part of my profit trap. If we're at 205 to 200, there's a profit trap window right there. So let's say it just closes where it is right now. Well, that's a $1 profit trap on top of the $7 credit. So that's an income trade. And my avoid, not really avoid, but if price is above 195 by Friday, then I keep the full credit and possibly have a profit trap. So a couple of good things to continue with this week is my Tesla trades could get called away, which I just do a quick repair. And I'm going to add this to my YouTube channel. I'm just going to talk about what I did on Tesla from the initial trade. And then I own the shares and I have a covered call. And right now, that to me is, helping me lower my cost basis. And I'll turn this into a 247.83 minus 1666, get it called away at 247.50. I'm flipping Tesla for about a $1,600 winner in a week. Now, granted, if I didn't do anything on Tesla, well, I'd be up about $3,000 right now. That's the truth. Like if I didn't do anything and it's up from, my break even up to 277, I'd be up $3,000 in Tesla. Okay. So did I shortchange myself? I mean, yes, a little bit. But in the event that Tesla, let's say, comes back down, well, I lowered my cost basis down to 220 and change. Like, so even if I wanted to sit on Tesla, I'm lowering my cost basis. Anyway, and I have, look, the reason why is this is an income trade that is up about 90%. I'm going to go ahead and probably close this one out for profit. This one's another one for April and another one for May. I'm just going to give these one more time. I might just flip it again for income. So this one I'm probably going to take profit on. This one I'm going to get it repaired and take another $1,500-$1,600. And I think that's good. So Tesla, this trade, this account. Yeah. So this one, 127, as long as it stays above 250, I mean, by Friday, this will be full profit. I'm up about 90% of the profit right now. This one, have another couple income trades, and then I sold some premium when Tesla was really beat down. I did a pretty wide credit spread that I'd be happily willing to own Tesla around 190 or less. So anyway, but I'm gonna do a video on that one, just talking about using options, calculating your break even, and doing a quick repair. Okay, all right, I'm gonna let you go. Have a great rest of the day, and we'll be back at it tomorrow. Thanks, everybody. Take care. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.